Okay, okay, guys, let's start the discussion. Very good afternoon to all of you, and welcome to today's discussion on section 9, basically. Very good afternoon, Nimit, for joining. Hope I'm audible and my voice is coming clear. If there are any issues, I can switch off my video. So basically, we have the recent judgment of Delhi of Bangalore Tribunal. In the Bangalore Tribunal, the case was for Infosys Limited, wherein the Infosys was making payment to its Chinese subsidiary, and they were not deducting the TDS. So the question is, the discussion is around whether the TDS should be deducted or not, is deductible or not, and the matter went to Bangalore Tribunal, wherein the Bangalore Tribunal ruled that in this transaction TDS is applicable. So we're going to discuss, there were various arguments taken up by the taxpayer, that is Infosys Limited. Some of the arguments are not valid in the current scenario, so we'll stick to one of the most important argument taken up by the Infosys, which went against Infosys. So let me start my presentation. Hope my PPT is visible. Can someone confirm on chat box? Okay, thanks, Navneet. So we will have a discussion on TDS on payment of FTS to non-resident for on-site services in the backdrop of Infosys Limited versus DCIT ITA number 4 and 1182 of 2012 by Bangalore Tribunal. So I wish to keep discussion, around this clause B. So if you see, we have section 9(1) subclause 6 on royalty, where it says income by way of royalty payable by the government or a person who is resident, except where the royalty is payable in respect of any copyright, any right, property or information used or services utilized for the purposes of business or profession carried on by such person outside India, or for the purposes of making or earning any income from any source outside India. So our discussion would going to be around this exception which is given in clause B of royalty and FTS. So we're not going to discuss what constitutes royalty or what constitutes FTS, what is the position in the DTA, what is the position in the tax. So this discussion would going to be around exception in the clause B. Similar exception is there in the FTS also. You see, this is the clause for the FTS in the Act, which says income by way of fee for technical services payable by the government or a person who is resident, except where the fees are payable in respect of services utilized in a business or profession carried on by such person outside India, or for the purposes of making or earning any income from any source outside India. And then we get clause C. So for example, let's say when when we are doing some technical project in India for which we need assistance of some foreign vendor. So we might be paying them royalty or a technical fees. And if they qualify, the charges that we are paying to the non-resident, if they qualify as royalty or FTS within the definition given under the Income Tax Act, then we generally say, okay, TDS needs to be deducted, correct? But we have an exception in the Income Tax Act, which says if you are making a payment of royalty or
only one side is visible.
I would request everyone to please put your mic on a mute mode. Unless you have question, please put your mic on a mute mode. So if you are making a payment to non-resident for royalty or FTS, then generally tax is deductible. However, the Act carves out an exception that wherein, let's say, if you are making a payment to the non-resident for royalty or FTS, but you are utilizing that royalty, the technical know-how, or let's say, the services of non-resident for the business or profession which you are carrying out outside India. In such a case, one need not require to have, in such a case, that payment to non-resident is not taxable in India. Similarly, if you are making a payment to the non-resident for royalty or an FTS, but the utilization of such services or know-how is for making or earning any income from any source outside India, then the law carves out an exception that the same is not taxable in India. Yes, Vipin, you raised your hand. You have raised your hand. Any query you have?
Your first slide is visible only. I mean, we are not able to see other slides.
Can you read fee for technical services?
No, we are on first slide, the introduction slide, the TDS on payment of FTS only.
Okay, let me restart.
Yeah, sure. Thank you.
Now is it visible, fee for technical services?
No, I mean, again, the introduction only.
No, Gauravji, only first slide.
Now is it visible?
Yes, it is.
Yes.
Right.
Okay. And also the movement on the PPT?
Yes.
Okay. So what I was saying that we have clause 916 of royalty in the Act, wherein we have clause B, which carves out an exception that if you are making a payment to the non-resident for the royalty, but you are using that know-how for business or profession carrying out outside India, in such a case, the payment is not taxable in India. Similarly, if you are making a payment for some know-how to a non-resident, but you are utilizing that know-how for source outside India, again, such payment is not taxable in India. So these are the exceptions given in the Act. And similarly, if we go to fee for technical services 917, we have similar exception available in 917. So it says income by way of fee for technical services payable by a person who is a resident, except where the fees are payable in respect of services utilized in a business or profession carried on by such person outside India, or for the purposes of making or earning any income from any source outside India. So in general, the payment if it qualifies to be royalty or FTS, we say it is taxable in India. But if it falls within the exception, then it is not chargeable to tax in India. And this was one of the argument of Infosys Limited. So let's understand, with this exception in mind, the facts of Infosys India. So we all know that Infosys India is a big software giant. They work on a lot of software projects. They have got one subsidiary in Infosys in China. I've named Infosys China. So they got one project from the customer, and for the work that needs to be carried out on site, that within China, they outsource the work to Infosys China. Now, what was happening? Infosys China was providing services to the customers of Infosys India, and Infosys India was making a payment to Infosys China for the services which Infosys China was rendering to a customer of Infosys India. And this fact may not only pertain to Infosys India, rather you will find that your clients, they want to export goods outside India, or there are many software companies or technical or service companies which are earning project outside India, and they have engaged consultants or third party vendors outside India. So when we are making payment to those third party vendors which are working on our projects outside India, so the question comes whether we need to deduct the TDS or not, and whether they are falling within the exception of 9(1), 6 or B. So this is the case, we're going to discuss. So briefly, the facts as I narrated are: Infosys China is a company incorporated in China and is a wholly owned subsidiary of Infosys India. Pursuant to subcontracting agreement, there were two subcontracting agreements. When Infosys India subcontract certain overseas work in China to Infosys China. With regard to above subcontracting agreements, India paid fees to Infosys China without deduction of TDS. As per Infosys India, payment was not chargeable to tax as per the Act and DTA. So Infosys took an argument that it is not chargeable to tax. Let's see what arguments Infosys took. The first, one of the argument I will say of Infosys was that as per Chinese tax regulation, FTS is only taxable if services are performed in China through fixed establishment and permanent establishment. So this was one of the argument taken up by Infosys India, that the Chinese tax authorities they have released a circular that if you are if someone is from, let's say, giving FTS services to some Chinese company, in such a case, such FTS would only going to become taxable in China if it has been rendered through some fixed establishment or permanent establishment. So applying the same analogy, they said, because now Infosys China does not have a permanent establishment in India, so the services are not taxable in India. However, this was brushed aside by the tribunal, stating that the Chinese has got a different regulation, we have got a different regulation. They are free to give a relaxation under their act. The another argument which was taken up by the Infosys India was the term fee for technical services as used in the DTA means any payment for the provision of services or managerial, technical or consultancy nature by a resident of a contracting state in the other contracting state, and being services rendered in China and not in India, the same are not taxable. So the other argument which Infosys took was that if you read the treaty, these are the provisions from the treaty which we're going to take up in the next slide also. The words used are in other state and other contracting state. So Infosys said, being the words used are in other contracting state, and the Chinese entity was providing services only in China and not in India. So, it does not fall within the meaning of fee for technical service in the DTA. The next argument, which Infosys took was the exception given in 917B, or you can say 96B, both are same. So 917B because it is fee for technical services. So exception provided under section 917B is applicable on the SSC. That is the payment by a resident for service utilized in a business carried on by such person outside India for the purposes of earning any income from any source outside India is not taxable. So in this argument, Infosys India said because we have customers outside India and the Chinese company is providing services to those foreign customers. So we have source outside India, and now the FTS which we are paying to Chinese company is for having the income from any source outside India, and thus the payment which we are making to Chinese company is not taxable. So we're going to discuss both the except the first bullet which I took up in brief. This bullet and this we're going to discuss. And at the end, they also took a argument of the honorable Apex Court in the matter of Ishikawa-ji Harima, wherein the Apex Court said that, in order to become the activity taxable, the services should have been rendered in India, which was actually, overturned by the Finance Act 2010. So we're not going to take up the last argument because in today's context, it does not matter. So we're going to take up, bullet number 2 and bullet number 3, and in particular bullet number 3 more in detail. Any queries till now? Any clarification needed on the facts of the case? Okay, so moving forward, this is the para 6 of the royalty article 12 of India-China DTA. So we have seen this is para 4, which talks about the definition or meaning of FTS. Now going to para 6. Para 6 says royalty or fee for technical services shall be deemed to arise in a contracting state when the payer is the government of that contracting state, a political subdivision, a local authority thereof, or a resident of that contracting state. So clearly para 6 says, para 6 adds the deeming fiction that even though it is written in section 4 that, in para 4, that service should be rendered in other contracting state, but para 6 makes it clear that if the payments are made by a person, let's say, who is residing in India, who is a tax resident of India, in such case, it would be deemed that the technical services is arising in India, and hence it will become taxable in India. So by quoting this paragraph, the argument of the taxpayer that the services should be rendered in India as per the DTA, was negated by the tribunal. Now, coming to our main point, which we need to discuss more in detail, that where the exception is applicable. So in this case, whether Infosys was right, with all due respect to the tribunal, whether Infosys was right or not, what is the what is the purpose of giving this exception in clause B? Clause B clearly says, except where the fees are payable in respect of service utilized in a business or profession carried on by such person outside India, or for the purposes of making or earning any income from any source outside India. For the benefit of all, the tribunal denied this benefit to the Infosys India. Tribunal said in this case, the source would be considered in India because the contracts, without going into the contract, they said because the payment are made from India and the activities are also carried out in India. So we would be deemed that, the source of the income is in India, and thus we will not give the benefit of clause B. So what is the view of House, if any of you has, have gone through the judgment of Bangalore Tribunal, what is the view, whether can we take an argument that in this case source is outside India, or the argument or the judgment of tribunal that in this case source is in India is correct. What is the view of the house? If anyone like to share? I think so. Let me proceed if you do not have any comment to make. So let's understand, in international tax, there are two very important concepts. One is, we all know, is a residence-based taxation, and second is the source-based taxation. Manish is saying source outside India. This was exactly the argument of Infosys, that source is located outside India. So in international tax, we said, there are two main pillars of taxation. One is the residence-based taxation, and second is the source-based taxation. So wherein the, and this was started by Vienna Convention, wherein we said a country gets a right to tax if you are resident of that country, or a country will get right to tax if you have source of income in that country. Now, if you see the old text, old literature, you will find source is actually linked to the activity, and which means, if you are doing some activity in other country, in other state, in such a case, other states get right to tax. So let's say if I'm a resident of India, and if I goes abroad, let's say in Singapore or Germany, and I'm doing some activity in Germany or in Singapore, because of which I'm earning some revenue, then I will say I've got source outside India. So this was the initial meaning of source, wherein the source was linked to the activity carried out by the taxpayer. Later on, because of the negotiation and because of the development, deeming fictions were added that even if you are not performing certain activity in that jurisdiction or location, however, being the payer is located in that country, it can be deemed that the source is in that country. Which means, again, we come back to a question that what is the advantage? So can we still take the advantage of exception given in 916B or 917B, or we cannot take the advantage? Let's take a couple of High Court rulings, to understand the meaning. One is of Havells India by Delhi High Court, wherein the Havells India, we all know, is into manufacturing of electrical fittings, fans, switches, etc. So they hired one company in US, CSA International, basically for testing and certification, which was to be used for export of goods to customers outside India, maybe in Europe or USA. So Havells India took an argument that because the certification charges or the testing charges which they are paying to CSA US are going to be used for export sales, and being they were going to use for export sales, thus the source of revenue is outside India, and being source of revenue is outside India, the payment which we are making to CSA US is actually used for earning source outside India, and hence it will fall under exception of 917. So, and thus TDS is not taxable. The TDS is not deductible in this transaction while making payment to CSA US. So this is what the facts are, and so it's not Bombay High Court; it's actually Delhi High Court. So Honorable Delhi High Court in this case observed that we have to conclude that export activity having taken place or having been fulfilled in India, the source of income was located in India and not outside India. The mere fact that the export proceeds emanated from persons situated outside India and did not constitute them as the source of income. So the Delhi High Court observed that that the activities relating to the exports are fulfilled in India. That is, the manufacturing of the goods, are carried out in India, and thus, what you are receiving from outside India is only the income, that the payer is outside India, but source, they said, is in India. In para 13, they observed that 917B contemplates a source located outside India. It is difficult to conceptualize the place situs of the person who make payment for the export sales as the source located outside India, from which assessee earned profit. The export contracts obviously are concluded in India, and the assessee product are sent outside India under such contract. The manufacturing activity is located in India. The source of income is created at the moment when the export contracts are concluded in India. So very important point, again, the Delhi High Court highlighted that if you see the source, if you see the activities are indeed carried out in India. The contract for exports are signed in India. The manufacturing has been carried out, manufacturing activities has been carried out in India. And thus, in the case of Havells India, Delhi High Court very correctly, very aptly said the source is in India, and thus the payment which they were making to the foreign vendor for the certification becomes taxable in India. Another interesting judgment is of Gujarat High Court in the case of Motif India. So Motif India was actually involved in the export of software and support services. So for, they were having customers outside India. So they hired, a lot of correction needs to be done. Just give me a minute. So they hired one consultant in Philippines, Pacific Hub in Philippines, and they were making payment to the Philippines entity. So again, the question comes whether in this case one needs to deduct the TDS or not. Okay, my slide is visible. Can someone confirm slides is visible? Slides
Yes.
are visible. Okay. So now in this case, they engaged Pacific Hub Philippines to render services to customer. So the question came whether the payment which they are making to the Philippines entity is taxable in India or not. So what is the view of the house? Whether in this case, going by what Havells said, learning from the Havells, what would be the view of the house? Whether in Motif India, one can say that services are rendered outside India, or one will say that services are rendered in India, because source, as we discussed, relates to the activities. So in this case, what would be the view, whether the source of income for Motif India is in India or outside India? Manish is saying it is outside India, because if we'll assume that source is outside India, then the payment which we are making to vendor Pacific Hub would not be taxable. And the facts are more or less similar to Infosys India matter, except in the Infosys India, it was a Chinese treaty, and in this case, we have Philippines. But we can remain in the act. In Infosys India, Bangalore Tribunal said no, the source is in India, and in the Motif, Gujarat High Court said the source is outside India. So if you ask me, then going by the judgment, which was given by the Delhi High Court in case of Havells and Gujarat High Court in case of Motif, I feel, the jurisprudence suggests where you are doing the activity. In Havels, the manufacturing activity was carried out in India, and it was only the export of sales. And as per the facts, the contracts were also concluded in India. In Motif, the software services were provided outside India. So the activities were carried out outside India. Where the contracts were concluded, is absent from the facts, but at least one fact is very much clear, that services were carried out outside India. And thus payment made to Pacific Hub Philippines was for source of income outside India and hence not taxable. Now going back to Infosys, I think in my view, I somehow do not agree with what tribunal said, that in this case source would be considered in India. In my view, because the customer is located outside India and the contract, and the portion of the work has been done given to Infosys China was for actually on-site services for which revenue was earned from outside India. So one can fairly take an argument that the activities are carried out outside India and the source of income is outside India, and hence the payment which we are making to Chinese entity is again not taxable in India. But let's, for the sake of argument, let's, if I go ahead by what the tribunal is saying in case of Infosys, and if we read part C, assuming that the source of payment, the source of income is in India, and if I read part C, then what will happen, that if the Chinese entity has engaged some third party to carry out the work, then such payment may also become taxable in India. See what part C is saying: a person who is a non-resident, where the fees are payable in respect of services utilized in a business or profession carried on by such person in India, or for the purpose of making or earning any income from any source outside India. So if I go by the judgment of Bangalore Tribunal, wherein the Bangalore Tribunal concluded that the source of income of Chinese entity is in India, in such a case, the payment which we are making to Chinese entity is taxable. But also, if Chinese entity is making payment to any other vendor, then I think clause C gets attracted and the payment would become taxable under the Act, which cannot be the intention of the law. So as far as source is concerned, in my humble view, the source is located, at least in case of the Infosys matter, this is what I believe in, that the source is located outside India and the income should not be taxable in India. But as a jurisprudence, my suggestion is that when you are concluding the contracts for customers outside India, try to conclude them at least, outside India, so that one can take an argument that, see, going by, what the observation of Delhi High Court in the case of Havels, that being contract is concluded outside India, customer is located outside India. So the payment which we are making to third party vendors or, to vendors for providing services to customer, one can safely argue that the source of income is outside India and hence not taxable. So any questions? This was for today's discussion, because many a times our clients pay fees or royalty, most likely fees to the foreign vendors for the work carried out by them outside India, wherein the customers are also outside India, and the question comes whether TDS should be deducted or not. So if it pertains to export of goods, I think the answer is clear, because all the activities are carried out in India. it is taxable in India. As far as commission incomes are concerned, commission income is generally not an FTS, so it does not fall within the definition. So TDS is not applicable on commission income unless that foreign entity has got permanent establishment or business connection in India. Barring that, if it is for services, as we discussed, the Bangalore tribunal judgment may throw up some challenges, but I think the Gujarat High Court judgment, relying upon the Gujarat High Court judgment, the relief should be available to the taxpayer. So this was, with me for today's discussion. If you have any question on these points, we can discuss. Now the house is open for all. So let me see, what is coming up in the chat box. Devinder Singh is saying, just wanted to check if we pay salary to a person who is located outside India, say in Dubai. Salary, okay. What would be the tax implication? Would it be different if instead of salary, professional consultancy charges are paid? Here, the person who is making payment is having both domestic and outside clients. It is all mixed as far as services, both for India customer and foreign customers rendered by. Devinder ji, as far as salary is concerned, so salary where we say where activities are performed, actually there the income accrue or rises in case of salary. So if it is salary and if you have permanent establishment outside India, I think based on the facts, one may take a stand that it is not taxable in India. But better would be that the payment is made by the permanent establishment and not you making the payment from India. Second, as far as professional services are concerned, if certainly one cannot make out whether it is for the customers in India or outside India, the professional fee will become taxable in India. However, we do not have FTS clause in the UAE treaty, and there are judgments if we do not have FTS clause in the UAE treaty, it would be treated as business income, and in the absence of business connection or permanent establishment in India, the same would not be taxable. So I hope you got my view that there are more chances that the payment which you are making to such non-resident may not become taxable in India. But yes, we need to see the facts more in detail. Mukesh, in case of Infosys India, Infosys is earning the income and therefore Infosys can only sign the contract. See, the contracts are generally signed by both. If we apply Infosys ruling clause B, will never apply in any situation. I agree, Nimin Bhai, ki in such a case, clause B may not apply in most of the situation. No P outside India. Sir, P, I'm saying, no P outside India. If you have an employee outside India, who is working for you, then I think, there are high chances that such employee may create a permanent establishment for you outside India. Okay, so any other question on today's discussion? So very interesting judgment by Bangalore Tribunal. Let's see how the jurisprudence evolve on this concept. Yes, Pratik, you have some question, please go ahead.
Hi, sir. As rightly mentioned, for activity related to goods, the activities are carried out in India. But with related to, say, for export of software services, can we say that since the employees are in India, hence activities also undertaken in India?
See, in this case, the on-site work, the work which needs to be done in China was actually subcontracted to China. So the portion, let's say on which Chinese entity was working, they were working from China. They were not having any permanent establishment in India. And for that, no Indian employee was involved. So we cannot take an argument. I'm not in a favor to take an argument that activities were actually carried out in India. For the on-site work, activities were actually carried out outside India.
Right, sir. Thank you.
Okay, any other point? Any other question? Okay, so let's stop. Thanks, friends, for joining in today's discussion. Hope we all learned together. You got more clarity on the Infosys judgment and the litigation ahead. Let's see how the jurisprudence involved on this exception given in section 9167B. So thanks a ton for attending. The recording of the session is available on my YouTube channel. Thank you.